Hello, good day, guys. My name is Nick, technical analyst SuperForex. Today, we shall be looking at technical analysis on the currency pair, the Eurozone to the Great British Pounds. And first, we'll be talking about fundamentals before we move right down ahead to technicals, which is purely what we're seeing on the chart. Now, economists have noticed that a key rise to the Euro GBP moving above the 0.90. It's a sharp sell-off in risk in the near term, as we expect a fragile risk appetite to aggressive market price on the BOE and lower energy prices to continue to prove a headwind for GBP. We thus forecast Euro GBP at 0.88 in 1M. Further out, we remain cautiously optimistic that the cross will head lower as a global growth slowdown, and the relative appeal of UK assets to investors are a positive for GBP relative to EUR. Now, what we expect from this, we see that the key risk to Euro GBP moving above 0.90 is a sharp sell-off in risk, where capital inflows fade and liquidity becomes scarier than expected, while other risks are the outlook for the UK's economy deteriorating sharply compared to the Euro area, lower energy prices and renewed escalations, and so on and so on. Now, what do we expect from this? We have noticed purely on technicals, we have noticed a strong support pivot point at 0.87068, and another minor support we can say, or rather call this at 0.87356, before we have another support at 0.87645. And we are looking at a breakout of the 0.88238 zone. And a breakout of this, we're looking out for a much more clearer zone at 0.88409 upwards thereabout. So what to expect if we are to make an entry to this trade, checking out 4 hours time frame. We are seeing a similar breakout from these very important zones, strong resistance zone of 0.88178, and a breakout we are looking out for a new zone at 0.88998, which is about 95 pips away from that entry point, of course, which is good money. That's our technical analysis on today's currency pair, Euro GBP. Now let's move over to the stock markets. Hello guys, welcome back. Now today on the stock market, we'll be having a look at BAN, Bank of American stock, and the main thing to watch out for this is that the Bank of American stock has downgraded to a neutral at CT. And CT, we have seen that a downside risk to net interest income, NII, estimate for the next year due to a catch-up on a deposit repricing and non-interest bearing deposit outflows, outweighing the benefits of fixed rate assets repricing, while CT is below the consensus on NII estimate for 2023. Now, moreover, they believe the bank sector has almost fully priced in 2023 NII tailwinds, while the credit risk is still a wild card. They see the potential for a better than feared scenario. However, investors should be cautious while trying to play the credit trade. Now, we are yet to see a meaningful deterioration. Plus, we believe that the regionals will be a better place to play the game of which we are also waiting cautiously on capital returns, as the bank may be forced to set aside increased capital requirements as of 0925 EST, and looking at 14.25 GMT. The Bank of American stock price trades at 1.2% lower, while shares are down over 13% YTD, outperforming the S&P 500, as we can see now. We're looking at a decline at least to the most recent support zone at 35.56, and probably an extension to 33.68. So if we were to make an entry at this point and let our trade run up to 35.87 thereabout, we're looking at 17 to 20 pips and maybe a pullback, and then a flush down to the 33.35 zone, which is about 42 to 50 pips from our entry point, which of course is good money. And that's our technical analysis on today's stock, Bank of America. I remain your host, Nick. Bye for now.